G'day YouTube, Max right here, and I stumbled across this the other day. I mean, I think a lot of people are talking about it, but CEO Ray Dalio of Bridgewater published this document. This is what I think of Bitcoin. He had a whole bunch of questions about it in the document and had a little bit of a Twitter interaction with others. I don't use Twitter, but I did find this on a video. So he said, I would, however, very much welcome responses to what I think about Bitcoin point by point. By and large, do you agree or disagree with each point, and what am I missing? And he's asking very humbly, he's asking with genuine curiosity, and so it's just great interacting with people who are coming from this space. So I thought I would take a crack at it, being involved in Bitcoin since 2013, or 2012 actually, seeing the vision for it, and writing a number of books on it, etc. I thought I'd give this a crack. So took some clips out of his paper, and we'll just go through them bit by bit. I think I can do this here now that I've got those two big ones out of the way. So, in his paper, he writes, I should clarify, and I should preempt this. The paper, I think, is very balanced. There's a lot of good points, a lot of question marks over Bitcoin. And so I'm not going to be talking about the good things. If you're only watching this video and not reading his paper, it's not all negative. There is plenty of positive in there. I'm just not responding to the positive parts. I'm responding to the negative parts. So, I should clarify with what I said hang on a minute. Okay, I got to start here at the period. Although Bitcoin is limited in supply, digital currencies are not limited in supply because new ones have come along and will continue to come along to compete. So the supply of Bitcoin-like assets should, and competition will, play a role in determining Bitcoin and other cryptocurrency prices. In fact, I assume that better ones will come along and displace this one because that is the way the evolution of everything works, i.e. new ways of doing things, and new things always have and always will replace old ways of doing things. Yes. So first of all, there's an excellent point, and it's actually a critical point that Bitcoin relies upon. So Bitcoin has been battling, let's say, gold bugs and traditionalists for its entire life. And Bitcoin's argument has been new and better things will come along. The answer is yes, new and better things will come along, just the same way a new and better thing came along this time, Bitcoin. Bitcoin came along and is superior to gold. And that's why it is being called Gold 2.0. It's why its market cap is exploding at a time when you would expect gold to be absolutely exploding. But Bitcoin is stealing its thunder because it is superior to it. May something come along better to Bitcoin in the future? Absolutely. And may something better than Facebook come along in the future? Absolutely. But you'd still want to be an investor of Facebook in the early days, correct? So yes, there is something that may come along better. And maybe a more accurate question is how long, how far away is that? And are there any barriers to entry or moats that help Bitcoin keep at bay competition? And I think there are, and so there are a few that are worth discussing there. The first is that it's first to market, brand name. Those are a couple of the obvious ones. Next one is, and it kind of touches it later in the article, but Bitcoin very much is positioning itself as the ultimate store of value. And we'll get into the reasons why later. But one of the critical components of why that is it has the most amount of hashing power behind it. What that means is there's billions of dollars worth of equipment out there called Bitcoin mining machines that people have invested in. They've bought these machines, and it is there providing security to the network. And if you have what Bitcoin will soon become, $1 trillion network, you need a lot of security behind that. And that mining power is the security. So the concept of just, trillions or billions of dollars of machinery being tossed out or thrown away for something new and better and a different kind of coin, that lends itself to some question marks over, well, why am I going to do that? Because it would be disadvantageous to do it. I'm not going to go and throw that machinery away, buy a new one for something with a much smaller or lower cap that isn't as secure. So something that Michael Saylor says, which I think is very, very powerful, it happens on multiple levels, is that the bigger the Bitcoin network gets, the stronger it becomes, right? And it becomes less risky. The higher the price of Bitcoin, the less risky it is because more people are involved in it. The network of it is greater and the network effects are greater. exactly the same things happen with the mining power. So the network is more secure and more powerful. The more powerful it gets, the more dominant it gets, it reinforces it, the less risky it is, so it becomes the least risky asset. So there are several moats around Bitcoin, and I've touched on just a few, but the core point is, with 100% certainty, new and better things come along to replace other things all the time, just as Bitcoin has done to gold. And there will be something that comes along better, but but there are some moats protecting Bitcoin, and I think it's going to be a very, very, very strong store of value in the near future and medium-term future and probably long-term future. Since the way Bitcoin works is fixed, it won't be able to evolve, and I presume that a better alternative will be invented and pass it by. I see that as a risk. It is. For those reasons, the limited supply argument isn't as true as it might appear. E.g., if blackberries were in limited supply, they still wouldn't be worth much because they were replaced by competitors that were more advanced. All true. I still don't know the answer to why that isn't a risk, but I would welcome my naivety being corrected. I think it is a risk. Like, if there's any slither of a chance of it happening, it is a risk. And there's more than a slither of a chance of it happening. But if just as Bitcoin has killed gold, and arguably Bitcoin will kill a lot of traditional assets, arguably including fiat currency and whatever else, doesn't mean you want to be in them and wait and not be involved in Bitcoin because something better than Bitcoin might come along. The strategy would still be to be in Bitcoin now while it's strong, and if you see something in the future, move from Bitcoin to something else. But we're not going backwards. We can't not go to Bitcoin just because something might come and replace Bitcoin. Bitcoin is already replacing existing systems. So it's still the place to be right now. I think there's a new point now. So at the same time, I greatly admire how Bitcoin has stood the test of 10 years of time, not only in this regard, but also in how its technology has been working so well and has not been hacked. Still, to one holding digital cyber assets at a time when cyber offense is much more powerful than cyber defense, the cyber risk is a risk that I can't ignore. When the Department of Defense can't protect its systems from being hacked, it would be naive to be totally comfortable that digital assets can't be hacked, which is one of the advantages of gold-like assets and is one of the risks of all financial assets. In fact, I think that there is a good chance that someday we will see a financial system which consists mostly of digits be shown to be more vulnerable to disruption and/or to cyber blackmail than is now recognized. By the way, these things are happening now at a growing rate. And blackmail than is now recognized. By the way, these things are now happening at a growing rate and can threaten the value of traditional financial assets. I am pointing out to you this warning to take or leave as you like. While I recognize that Bitcoin can be held offline via cold storage, I understand it is difficult to do and that very few people actually do it. So by and large, my understanding is that Bitcoin being digital and connected is not protected against cyber risks to my satisfaction. I look forward to being corrected. So the potential for cyber attacks, again, a valid risk, something that needs to be considered. What's critically important here, and I agree with you, maybe, I think a lot of people do actually hold their Bitcoin offline and in cold wallets. Plenty of people don't. And that's their folly. So the magic, I think the number one magic of Bitcoin is that it has that ability, because nothing else has that ability. Let's take, for example, gold. In order for gold to be used in any meaningful way, it has to be stored at a vault in any kind of quantity, especially in the larger quantities, right? If a hedge fund was going to buy it, you have to store it as a vault. One of the risks that you're going to talk about later in the paper is government risk, which I agree in these current times, you'd be a fool not to understand government risks. It is a huge risk. So now the question becomes, if you have gold or other gold-like assets, is there a way that you can hold them such that they can't be stolen? And the answer is no, there is no way. The government can seize them at any point, right? The magic of Bitcoin is you have the option to have it in cold storage. You have the option to hold it in other types of ways that are more secure than all traditional assets. So it's very much a comparative statement. Bitcoin, its best feature is that it has a huge improvement in this realm versus everything else. So it's not that difficult to do. I've been doing it since 2012, 2013. It was a lot more difficult now than then. It's not that difficult. It's quite easy to manage. Does everyone do it? No. Should everyone do it? Probably yes. And we're seeing that right now. We're seeing a lot of Bitcoins come off exchanges and being held in cold storage in what's called whale wallets as big money moves in. So yes, so there's two components to cyber risk. There's being hacked, but there's also the protocol being hacked to some vulnerability in the protocol. I'm not sure if you recognize that as a risk, but that is a risk that is worthy of looking at. So the Bitcoin is an open source code. There's billions of dollars locked up in there, and anybody who successfully hacked it, there's billions of dollars in prize money. It's open source, and hundreds of thousands, if not millions of people, the best in the world, who have massive incentive to try and hack it, have tried, and for 10 years they've been unable to do it. So that, I think, mitigates that risk significantly, that this probably is secure from the protocol being hacked. From an individual being hacked, that's obviously happened a lot more, and it's happened as a result of people having poor practices. So, by the way, I was a victim of a Bitcoin hack way back in 2013. Current value of the Bitcoins that I had stolen from me then, $50 million today. So yes, it hurts for sure. But I recognize it was completely my fault. It's a lot of the way people get into Bitcoin. Back then, somebody gave me $20 worth of Bitcoin, and I was like, okay, what do? They helped me make a wallet, and I put $20 worth of thought into security. But I got into it, I read more about it, I understood it, I started buying more. All of a sudden I had a lot, the price shot up, and I think at the time I had $280,000 worth of Bitcoin when it was stolen, and I still had a $20 password protecting it. My fault, not anybody else's. I learned from that, and now I can't even get my Bitcoin if I want. I got to fly all over the world and assemble private keys. But it's very, very manageable for me. I think it's a very acceptable risk to know that I can't get hacked. And I probably went to I went to an nth degree of security because of that experience that I had. I think a little bit of sensible thought now, and the new tools that have come available since back then, and it's much, much easier to hold them on an individual level. But what's critically important, I think the most important takeaway with regards to your point here, is that Bitcoin has an option to be protected from hackers. And you've got two different risks. There are state actors and then private actors. So you're talking about, hackers live in a basement somewhere in Russia trying to hack your Bitcoin. It's a genuine threat. Cold storage solves the problem. But there's a much, much bigger threat. And you can ask someone from Venezuela, you can ask someone from Cuba, you can ask someone from China, you can ask someone from almost anywhere. I know you studied history. The little bit I know about you is you have a very strong sense of history and studied it from history. The far bigger threat, especially as we see the economic system crumble, money printing go into overdrive, the far bigger threat is government theft. That is a far bigger threat. And that threat, that is where Bitcoin shines. It is infinitely better as a protection against government theft than anything else, okay? We will get to more about that later in here as you bring that point up elsewhere in the document. So, as an extension of Bitcoin being digital are the questions of how private it is and what the government will allow and not allow it to be. Regarding privacy, it appears that Bitcoin will unlikely be as private as some people surmise. Agreed. It is, after all, a public ledger, and a material amount of Bitcoin is held in a non-private manner. If the government and perhaps hackers want to see who has what, I doubt the privacy would be protected. Also, it appears to me that if the government wanted to get rid of its use, most of those who are using it wouldn't be able to use it, so the demand for it would plunge. Okay, we've jumped into a separate point there, so I'm going to address the first little part here. Again, compared to what? So I'm not sure, but I think with regards to your fund, don't you have to publicize everything that you own? So all assets have zero privacy value to you in terms of purchasing in the name of your fund. So there's no such thing as privacy in your world. But again, let's go back to the common man, if we will, for lack of a better word. Again, yes, you can buy gold coins and silver coins at a coin shop. You can buy them in cash, store them in his house, and he can have an aspect of privacy to that store of wealth. He can have the same with Bitcoin. So he has a little bit more privacy, especially with small numbers flowing around. I agree that the larger numbers, for all intents and purposes, privacy is lost. And is given that privacy is lost, there's another thing. As a large hedge fund manager, you have too much to lose to fight government tyranny. We're getting a little bit into the weeds here, I recognize that. In the same way, the vast majority of bar owners and grocery store owners and employees, they don't want to force people to wear masks. They don't want to wear masks. They think the whole thing is moronic. But if you own a bar and you've got a liquor license, and the government's going to come and steal your liquor license and destroy your $1 million business, all of a sudden you are now enrolled for free in joining the Stasi and running around. Put your mask on, put your mask on, put your mask on, and they've got a free enforcement arm because they're threatening to steal your $1 million bar. Well, you in your situation, your $1 billion fund, they can hurt you. They're going to make you comply with whatever the hell they want, and you're going to. So the aspects of privacy, I don't think are particularly relevant to you. The aspects and those other components of keeping government at bay are not relevant to you in the terms of buying in your fund. It's just not. The bigger you are, it's just a bell curve. You may be a different individual, I don't know, but just as a trend, the more you have to lose, the more you are going to be just obedient, because more can be hurt, more can be done to you, you can be hurt in more ways. And so if government outlaws it, then I'm sure you're going to sell it all. You just will. I don't think other people will, but I think you will, in the name of your fund especially. And so that is something to consider. Those things are not that relevant to you. But they are to the common man. And again, I think we'll come up to that later. Let me move on to a second point you're making here in this. If the government and perhaps hackers want to see who has, they can see it, and the privacy is lost. Yes. Oh, and if they want to get rid of its use, most of those who are using it wouldn't be able to use it, so the demand for it would plunge. Okay, here is probably a pretty important concept to introduce. The way I saw Bitcoin when I started buying it in 2012, 2013, I saw it as the insurance against a collapsing economy, a collapsing fiat dollar, overprinting, massive expansion of government and corruption, and a way to get out of the system. I believed back then that if you leave your money in the system, be it bail-ins, what happened in Cyprus, be it bailouts and inflation, your money being stolen through inflation, being all the different mechanisms they've got. When you're in the system, your wealth can be stolen. There's no doubt about it. And only by stepping out of the system. This is the insurance premium. I don't have to put 100% of my wealth in here, but I do want to take insurance against those things that are happening. And I thought that in 2012. You can imagine what I think and what many other people around the world think now after the trillions of dollars spent in the last 12 months, right? So this is the insurance premium. As the market perceives the risk of that road never ending and modern monetary theory and all of that stuff, the risk premium goes up. In the same way, a healthy 20-year-old pays a much lower premium on life insurance than the 85-year-old serial smoker who's a skydiving instructor. His life insurance is significantly higher. As everything plays out, which is absolutely inevitable to play out, more people wake up to the fact that they need insurance against that. And the price of Bitcoin is the risk premium. It's the insurance premium on those eventualities taking place. So that is why I see why, from your perspective, with so much to lose, you'll play the game and you'll do what you do and you'll be obedient to the government if it gets that far. By the way, I'm taking worst case scenarios. If the government wants to try and ban it, what does it look like? Well, the answer is they will. I think they will try and ban everything that prohibits you from being penned in the system that they can steal from you on a regular basis. So yes, I think that will happen. You have the luxury of being obedient, but I mean, I went to Cuba 15 years ago. Every single person in the entire economy showed up to work for 40 hours a week and worked for the government for free. And they got a house, and they got a shitty house, and they got shitty education, they got shitty hospitals for it. They didn't get food though. Every single person in the country worked in the black market to survive. Everyone without exception. And as you look around the country, look around the planet, small businesses being destroyed, livelihoods being destroyed. They need to eat, and they can't afford to have everything stolen from them because they will starve to death, as you see in Venezuela, as you've seen in all over the world where tyranny sets in. And as this progresses throughout the world, the people are not going to give up their life jacket. Bitcoin will be their life jacket that they can use. They can buy. We've seen financial collapses a million times throughout history. We've never seen it before where they're sat on the sidelines, a new system ready to come in that had some level of plausible deniability. Do you own Bitcoin or not? I don't know. What are you going to do? Search me? Do I have it? You find it. You tell me. It's got some level of deniability. It's got some level of privacy. Maybe not as much as we'd like, but some level. And as things progress, the common man is just going to flock to it, absolutely adore it. And it is their life jacket that they will hold on to for grim life. I see in your situation, you can see another side to that. Okay. Starting with the formation of the first central bank, for good logical reasons, governments wanted control over money, and they protected their abilities to have the only monies and credit within their borders. When I, put myself in the shoes of government officials, see their actions, and hear what they say, it is hard for me to imagine that they would allow Bitcoin or gold to be an obviously better choice than the money and credit that they are producing. I suspect that Bitcoin's biggest risk is being successful. Because if it's successful, the government will try to kill it, and then they have a lot of power to succeed. We are on the same page. We're 100% on the same page. And I'm not that excited by institutional money getting in. A lot of people in this space, they're excited by institutions coming in, and it's going to drive the price of Bitcoin up, and they're going to feel rich, right? Whoop-de-doo. The problem is I see you guys as being weak hands because you've got so much to lose, you'll obey. I know the 100 million people who are being starved to death, who've had their businesses destroyed, their incomes destroyed, and have no other options, they're not going to comply. And Bitcoin is their best tool to fight. By way of example, this is a completely different point from memory. By way of example, what if 10, 20, or 30, or 40, 50% of private holdings of gold were shifted to Bitcoin to diversify holdings? Or what if 10 or 20% of those who hold Bitcoin got on its wagon and wanted to diversify into other assets like gold and stocks? Or what if the government wanted to prohibit its use? Or what if, etc., etc.? What would these scenarios look like? They paint a picture that is highly uncertain. You can read the full report below. That is why, to me, Bitcoin looks like a long duration option on a highly unknown future that I could put an amount of money in that I wouldn't mind losing about 80% of. I think this is an absolutely brilliant assessment. I, like you, think it's inevitable that Bitcoin, the more powerful Bitcoin becomes, and more accurately, the weaker governments become, and the more broken their systems of control become, the more they try and keep people penned in the shed, right? And so I think they might come for Bitcoin as well. I think it's absolutely inevitable. Now, how they do it is very, very interesting. They can do an outright ban eventually, and that may take place. And if it did, I think it would be many years into the future. So we can talk about those likelihoods. But yeah, they'll want to tax it to oblivion. There might be a one-time wealth tax, 90% wealth tax on any Bitcoin profits, something that they could do. There's a lot of different things they could do. And we're going to take the extreme worst case scenario of outright ban. Anyone using Bitcoin gets shot. Let's go to that level. This is why I think your assessment is perfect. As I've said to everyone I've ever advised getting into Bitcoin since Bitcoin was $10, there is that opportunity where you can lose everything. So you don't want to put 100% of your portfolio into it. But it can be your best lifeboat in a scenario that is increasingly more and more likely. I've thought it's absolutely inevitable for 20 years, but nonetheless, a scenario that is more and more likely, which is massive expansion of government, massive expansion of the money supply, rapidly depreciating fiat currencies, absolute potential for hyperinflation. In all of those scenarios, Bitcoin is the life jacket for the common man. And your assessment is brilliant. Have some as an insurance. You pay your insurance premium that your house doesn't burn down, and you hope your house never burns down. But every single person needs to have some Bitcoin in their wallets for this exact reason. That is what Bitcoin looks like to this non-expert. I am eager to be corrected and learn more. Or on the other hand, believe me when I tell you that I and my colleagues at Bridgewater are intently focusing on an alternative storehold of wealth assets. Again, a magic sentence. This sentence, I know you get all of the issues, and you say it elsewhere in the paper. Money printing, 0% interest on bonds. All the problems are there. All the problems are there, and we desperately need alternative storeholds of wealth. Question: do you think there is any type of asset that the government will not come after as their systems crumble and people escape the prisons of the banking system? So once you get past that, once you get, I'm either obedient, I stay in the pen and get shorn year after year until there's nothing left, or I try and get out of the prison, knowing that if I get out of the pen, then maybe they might ban the asset. Bitcoin becomes irrelevant in this part of the conversation. It doesn't matter. It could be Bitcoin, it could be gold, it could be anything. I know that all those things are going to happen. So the question becomes, which one gives me the best chance? Is it the one with maybe arguably a little bit of privacy, maybe arguably a little bit of censorship? Or is it the thing that I can't walk through a metal detector with? Or is it the thing that if it's in my pocket and they pat me down, they can feel it? Which one gives humanity the best chance? And by orders of magnitude, it's Bitcoin. Orders of magnitude. And so again, it's the common man that absolutely has to have this, and will be at the end of the day, will be willing to risk anything to get it. And then there's a later part of the essay written by, I believe, your team members or employees, and they just get some bullet points. I'll go through them. Bitcoin remains an extremely volatile asset, and its future purchasing power remains fundamentally speculative proposition. Compared to established storeholds of wealth, such as gold, real estate, or safe haven fiat currencies, Bitcoin faces much wider range of outcomes in terms of its future value. Agreed. The much wider range of outcomes in terms of its future value, absolutely, absolutely. It could be the reserve currency of the world. That's an absolute possibility, which means it goes up another 100, 1,000x from here, God knows. Or it could be something that gets banned, shoot one, scare 1,000, and people go to jail, people get shot, who knows what the hell, and everyone's like, I got no Bitcoin stops, hands on heads, I'm not using Bitcoin anymore, and Bitcoin plunges to zero. All of those are in the wide range of outcomes. They absolutely are. But again, it is the only lifeboat that you have. So people are going to take it. People are going to take that risk. Every single day, people in Cuba take a risk and go to work in the black market, and they're not allowed to and don't pay taxes. They have no choice. Every single one of them does it. No exceptions. Bitcoin still faces meaningful regulatory tail risk and lacks any of the underlying government backing or deep history that would provide a more fundamental baseline of future demand. While greater regulation might help Bitcoin gain broader institutional acceptance, it could also trigger selling by some of its largest existing owners who prioritize a lack of public oversight around the asset. Yes, absolutely. Yeah, it's kind of coinciding with my point earlier. The bigger you are, the more you've got to lose, the quicker you fold. And so as big institutions come in, and then it becomes illegal to say hold Bitcoin, all the institutions have to sell it. I don't know how you sell it if it becomes illegal. Maybe you just have to eat it. But let's say they burn it, or they say, okay, we provably burn our Bitcoin because it's illegal to own, so we can't sell it. So we provably burn our Bitcoin. Now we don't hold any Bitcoins. We're good little boys, Mr. President or Mr. Government, whatever country you're in. Okay, cool. The supply of Bitcoin just got slaughtered. It's now even more rare than before, and the people who are clinging onto it for dear life realize it just got even more valuable. So, but again, that's the common man's argument. In a hedge fund, yeah, it could be that you lose it all. It could be that it goes up 1,000 times. We might get into that argument a little bit later of percentage chances of probability chances of it coming out. While there have been improvements, current levels of liquidity still constitute real structural challenges to holding Bitcoin for large traditional institutions such as Bridgewater and its clients. All right, I'm not exactly privy to how much liquidity you need. And what structural challenges to, just this for holding Bitcoin, just for holding Bitcoin. No, I don't think so. You've got your BitGos, you've got your Geminis, even you could argue BlockFi if you want to return on it. You've got your bits and pieces to that. I don't think holding Bitcoin is a challenge. I think you guys need to do a little bit more research on holding the Bitcoin. The only problem is the easy way for you guys to hold it is to use these parties, which, of course, if any law changes, if the government says take everyone's Bitcoin, you've lost all your Bitcoin because you don't actually own it. But I don't think if you hold it as an institution, you're going to disobey the government anyway. So there's no downside. Use Gemini, use BitGo, and you're gold. You're covered. Similar to gold, Bitcoin has limited usage as a medium for directly exchanging goods and services. So there's a concept called Gresham's law, which is bad money chases out good. And the argument is that the last thing in the world I want to do is go and buy anything, a coffee, a house with my Bitcoin, because my expectation is the price of Bitcoin is going to skyrocket. By way of example, my former mother-in-law, persuaded her to buy $1,000 worth of Bitcoin in whenever it was, 2013, I think it was. Bought $1,000 worth of Bitcoin. It went up to $10,000. They sold half. I've turned 1,000 into 5,000. It's great, and I'll keep $5,000 worth of Bitcoin. Awesome. With their $4,000, they replaced their money that they put in, the $1,000, and they had $4,000. They went on a very nice holiday and said thank you to me. The cost of that holiday today is something like $150,000 because they sold the $4,000 of Bitcoin back then. So good. The reason as a consumer, you don't want to spend your Bitcoin. So there's no desire for Bitcoin to be used as a medium of exchange. I've tried, I try selling my products and services for Bitcoin in a Bitcoin community. They don't want to use their Bitcoin. They want to hold on to their Bitcoin. They want to give me their paper currency, and then I go and buy Bitcoin with my paper currency. That's how it works. Bad money chases out good. Now, but hunger brings back good money. So yes, we're all holding as a store of wealth, but if the economy continues to get destroyed, if government continues to expand, money supply continues to expand, inflation continues to go up, if all these things happen and I need to buy food, you better believe that vendor, he's more than happy to accept the Bitcoin. And finally, I've run out of cash. There's no more paper. I don't have it anymore. It's become worthless, or it is worth less. I'll spend everything I've got, and then I'll spend my Bitcoin. And believe me, the vendors are waiting there. Because the vendors are the ones who are buying. Look how many people are buying Bitcoin, driving up the price. They're vendors, and they will take Bitcoin for their services. And Bitcoin will work beautifully in that environment. It's proven to do so, given that it can work in that environment. When it's time, all that money will come out and it will be the basis of the new economy. Finally, beyond being able to retain its purchasing power through time, a good storehold of wealth also needs to be easily exchangeable and accessible, both now and in the future. Compared to some other traditional storeholds of wealth, such as gold, art, and real estate, Bitcoin is much more easily exchangeable, especially for individual holders. The reason I put this paragraph in here is that you've acknowledged, especially for individual holders. That is the magic. Bitcoin is more powerful in the hands of individual holders than institutions, for the arguments I've made previously. Indeed, given its digital nature, Bitcoin might be the most portable storehold of wealth, much more secure than physical cash. Completely agreed. For the individual holder, for the normal person, it is a godsend. It is magic. It is the lifeboat that everyone is looking for who understands the dangers on the horizon. Bitcoin is superior to everything else. There are 7 billion people who can't afford to be without Bitcoin. So what's going to happen to the Bitcoin price? So I understand the threats. We've talked about the threats of government eventually banning it. As their system crumbles, they get more and more desperate. I mean, they outlawed gold, in the Great Depression. So yeah, why would I not think that during the next Great Depression that they're going to outlaw everything that will be the people's lifeline? They will. We know. For the big hedge funds and whatever else, yeah, you've got too much to lose. You'll be obedient. The individuals will not. They will not comply because they need to eat. And it's as simple as that. So far, Bitcoin's ability to offer some diversification benefits seem more theoretical than realized. What do I have to say about this? I mean, I just disagree, but I'm trying to remember what was written in the article, which was they drew some conclusions and some graphs and some correlations between gold and whatever else, and it seemed quite correlated, I guess, is what they were saying. So it didn't offer anything in the ways of diversification. But yeah, I would just look at the Bitcoin price. I think on average, and actually I meant to mention this earlier, Bitcoin's volatility is a problem. if you're on a short-term basis, Bitcoin is volatile. You don't know what it's going to be worth next month. On a 2-year horizon, I think in the words of Michael Saylor, it is boringly spectacular. Every single 2 years, for any 2-year interval for the last 10 years, Bitcoin goes up 200%. It's the best performing asset of the decade. And it all comes around to, I don't know, do you want diversification? How about something that just crushes it year after year? But yes, we've been in an environment since its invention. Bitcoin has never seen tragedy. 2008 global financial crisis happens. Bitcoin gets invented in 2009. It's never seen a complete crush. And when those crushes happen, my anticipation is it's a liquidity event. Everything will get crushed, including Bitcoin, including gold, including all of the assets, stock market, real estate. Everything will get crushed. What I think we'll see is that Bitcoin and gold come out of it the fastest and the strongest. That is what I've been banking on. But I still think there is one more big buying opportunity for Bitcoin, which is when the stock market and real estate markets get destroyed. Bitcoin institutional acceptance slowed by volatility, regulatory uncertainty, and still immature infrastructure. If a fundamental purpose of a storehold of wealth is to preserve or increase one's purchasing power over time, we think Bitcoin feels more like an option. It remains a highly volatile and speculative asset in the short term. In the long term, it exactly meets the criteria. Compared to established stores of value, Bitcoin is not yet widely used as a savings vehicle or reserve asset, with no meaningful participation yet by governments or the largest global institutional allocators. Even looking at the recent increase in private institutional, no, it goes on to a different point. So yeah, and that's why the opportunity is there. Once everyone comes rushing in, then yeah, there's no more opportunity. It's not going to go up 1,000x. The opportunity for it to go up 100x or 1,000x from here is when all that money eventually comes in. So that's your upside. With that comes this risk. Yeah, you look around and you're the only big guy in the shop. Not the only one anymore. We've got Michael Saylor's and we've got plenty of other people holding Bitcoin. Probably 2 years ago, you're going to be one of the only ones. Now, not so. And if you want to be last, so be it. If you want to be early and get the biggest gains, this is what you have to deal with. There are two main regulatory paths we think are more likely to play out in the years ahead. Clamping down on Bitcoin and cryptocurrency usage for fear it could undermine traditional fiat currencies that cuts off further development of this asset in its current form. Worst case scenario. Or best case scenario. Creating a regulatory environment that engenders more trust in the asset long term, but could lead to a heightened volatility along the way. Not entirely sure why it would lead to a heightened volatility, giving it that regulatory approval. Heightened explosion in price, yes, as the regulatory environment settles and institutions are welcomed in and feel more safe in coming in. Yes, I think that's the best case scenario. I think you're calling an absolute explosion in price to the tune of 10x, 100x, 1000x volatility. That's volatility I'll take all day, every day. So yes, the broad range of outcomes for Bitcoin is absolutely mind-boggling. It's anywhere from $0 to $1 million plus of Bitcoin, even more. All of these things are on the table. And you've got to put a probability on each way one of these things go. Now, you have a fiduciary responsibility in your fund, not a liberty responsibility. See, for the individual investor, I believe to a degree, it's a lifeboat for them and they need it for their liberty, and they will go against that. They will go against any kind of thing. Enough people will go against that the move by Bitcoin to ban it will not be as successful as I think most people think. But I understand you don't have that responsibility. You have the fiduciary responsibility and not a liberty responsibility to your customers. And so big institutions, if it gets banned, it'll get hurt. The price of Bitcoin will get hurt. Absolutely no doubt about it. But you'll be stuck in the pen of keeping your assets in the world where they're getting taken by governments. And that's just as simple as that. That's where it all comes down to. Or go years into the future over all the bullshit, and that's what happens. Now, way before that happens, I think that some other things can happen. So, a point that you raised earlier, something better may come along. even more censorship resistant, even more private, and arguably those things have come out. Maybe they're not as valued as yet because the risk premium of the governments being tyrannical is not priced into the market yet. And so maybe privacy coins and other types of coins and things like that, maybe they're not doing as well as Bitcoin right now, but maybe the technology already exists. And maybe the demand for those things are going to surge if anything like that, like this worst case scenario happens. And at that point, maybe in anticipation of that, if you can see that coming, maybe you move out of Bitcoin and you move into something else. But nonetheless, the hunger for people to build themselves lifeboats to protect themselves from what's coming is there. And Bitcoin is the best alternative right now. But maybe they're building and they're innovating and they're building layer 1 and layer 2 and layer 3 around the Bitcoin ecosystem. Or maybe it's over there in another network like Ethereum or DeFi. Or maybe it's in the cryptocurrency space somewhere. Or maybe it's some other space altogether that will completely surpass Bitcoin. But nonetheless, 7 billion people need this like they need oxygen. They need this. And so the demand will be there to one degree or another. The institutions are the weak hands. And they're the dangerous ones for me. And for large institutions to hold Bitcoin in their portfolios, they also need to be sufficient liquidity for trades to be conducted in size without destabilizing the market. At this point, while Bitcoin is becoming comparable to some of the markets that Bridgewater trades, it remains small overall despite its liquidity being at an all-time high. Agreed. And again, I think you summed it up with an excellent argument earlier. Don't buy it in there with the intent of trading it. This is, you're paying an insurance premium on what is inevitable to happen. You're watching the arsonist walk into the building and you're buying fire insurance. That's what this is. And you buy your insurance and you hold it. You're not going to trade it. And so to the degree that makes you comfortable, you buy the insurance. If trading is important to you, then you don't necessarily do that because of these risks that you outline. But it's the long-term insurance that you're buying. And we are all the way back to the beginning. All right, guys, let me know in the comments below. Did Ray Dalio nail it? Are his points valid? Did you think that, did any of his points concern you to the point where you're like, geez, I need to get the hell out of Bitcoin? Or conversely, were my points good? Did you think I represented the community well? Did you think that I answered some of those points well? If so, which ones do you think were the most powerful? Let's get an awesome discussion going down below. And by the way, I don't use Twitter. It's not my bag. So if you want to post this video on Ray's Twitter account, hopefully he might take a look. That would be awesome. Go ahead and do that for me. That would be super helpful. So guys, like, subscribe, do all the fun things, and I'll see you soon.